Hey there, welcome back to the channel. If you're new here, I'm Stick War God, and today we're diving into something that a lot of people want to learn about: how to start investing. Whether you're brand new to the world of investing or just looking to brush up on the basics, this video is for you. We'll cover some fundamental tips for getting started, and then talk about something really important: understanding different types of stocks based on their volatility or how much their prices can move up and down. So, let's get into it. Alright, before we get into the specifics of stocks, let's start with some basic investment tips that every beginner should keep in mind. These are the principles that will guide you on your investing journey. Tip number 1. Start early and be consistent. The first rule of investing is start as soon as possible. The sooner you begin, the more time your money has to grow. This is all about the magic of compound interest, where your earnings start earning returns as well. Even if you only invest a little bit at first, starting early gives you a head start. The key here is to be consistent. Consider setting up automatic contributions to your investment account every month. Just set it and forget it, and watch your money grow over time. Tip number 2. Diversify your portfolio. The next tip is all about diversification. Don't put all your money into one stock or one company. The stock market can be unpredictable, and if all your money is tied up in one stock, you could lose a lot if that stock takes a hit. Spread your investments across different stocks, bonds, and even other assets like real estate. This reduces risk and can help stabilize your returns over time. Tip number 3. Set long-term goals. Investing is a long-term game. It's easy to get caught up in the daily fluctuations of the market, but short-term movements should not cause panic. Setting long-term goals, like saving for retirement or a down payment on a house, will keep you focused. Stick to your plan, and don't sweat the small stuff. Tip number 4. Educate yourself. One of the most important things you can do as an investor is to educate yourself. Read books, listen to podcasts, or follow financial blogs. The more you understand how the market works, the better decisions you'll make. No one starts off as an expert, but learning as you go will set you up for success. Tip number 5. Understand your risk tolerance. Lastly, understanding your risk tolerance is key. Every investment carries some level of risk. Some stocks are more volatile and can offer big returns, but they also come with a higher risk of loss. You have to ask yourself, how much risk are you comfortable taking? This will help you decide where to put your money. Risk tolerance varies from person to person, and it's important to find an investment strategy that fits your comfort zone. Part 2. Understanding volatility. Now that we've covered some basic tips, let's talk about something that every investor needs to understand: volatility. Volatility refers to how much a stock's price can fluctuate. Some stocks barely move, while others can swing wildly up and down in a matter of hours or days. Understanding volatility is crucial because it helps you choose the right investments based on your own comfort level with risk. For example, if you're someone who prefers stability, you'll want to invest in stocks that have low volatility. On the other hand, if you're looking for bigger potential rewards and are okay with taking on some risk, you might be more interested in high volatility stocks. So, let's dive into the different types of stocks based on their volatility, starting with the more stable options. Part 3. Types of stocks based on volatility. Let's break it down by volatility levels. Low volatility stocks, defensive stocks. These are stocks that are less affected by market fluctuations. They tend to be more stable and are typically found in industries like utilities, healthcare, and consumer staples. These are the companies that provide essential products or services that people need no matter the state of the economy. Examples include Pepsi, Procter & Gamble, or McDonald's. If you're a more conservative investor who wants stability and is less concerned about huge short-term gains, low-volatility stocks are a good choice. They provide steady returns over time with less risk of sudden drops. Moderate volatility stocks. These stocks fluctuate in price but at a more moderate level. They often belong to well-established companies with a solid track record. Think of Apple, Microsoft, or Johnson & Johnson. These are large, blue-chip companies that are expected to grow steadily but aren't too volatile. Moderate volatility stocks are good for investors who want a balance between stability and growth. You're not likely to see huge swings, but you're still getting potential for growth. High volatility stocks, growth stocks. Now, let's talk about the exciting stuff. High volatility stocks, often known as growth stocks. These are the stocks that can have big price swings, sometimes in a short amount of time. They're typically found in sectors like technology, biotech, or even emerging markets. Stocks like Tesla, Netflix, or newer tech startups are examples of this category. These stocks offer the potential for huge growth, but they also come with a lot more risk. If you're an investor willing to take on more risk for the potential of higher returns, then high volatility stocks might be right for you. But remember, these types of stocks are not for the faint of heart. They can drop just as quickly as they rise, and market events can have a huge impact on their price. Part 4. How to use this information. So, how do you choose between these types of stocks? It all comes down to your personal goals and your risk tolerance. If you're looking to preserve wealth and avoid big swings, low volatility stocks will suit you. If you're looking for growth but still want some stability, moderate volatility stocks might be a good middle ground. And if you're all about high risk, high reward, then high volatility stocks are your playground. The key is to diversify. Don't just stick to one type of stock. Mix things up to find the right balance for your portfolio. Alright, that's a wrap for today. To sum it up, starting to invest is all about getting the basics right. Start early, diversify, set long-term goals, and understand your risk tolerance. And when it comes to stocks, know the volatility levels and choose what fits your strategy. If you found this video helpful, give it a thumbs up, and don't forget to subscribe for more tips on investing and personal finance. Got any questions? Drop them in the comments below. I'd love to hear from you. Thanks for watching, and I'll see you in the next one.